Good morning, guys. Welcome in. Welcome. Welcome in. Welcome in, everybody. Do a little switcher up here. Still I'm curious about this. Yeah, it's the same thing. Okay. Welcome in, guys. Happy Tuesday. How is everybody doing? I have my painting on the floor over there. You guys just saw that. Nobody saw that, right? Nobody saw that. Welcome in. Welcome. Good morning, guys. I'm curious which camera is better. We have two different cameras we are contending with today. It's the same thing. This one's angled. We're not level over here, so I have to figure that out. But this one's the money shot. We'll figure it out. Welcome in, guys. I hope you're all doing well. We have a lot to go over this morning. More important than anything else, there are things happening this morning which need to be discussed. The levels are incredibly important. Yesterday's session, we saw some supply rejections come in the market. We have some news this morning. Did you guys see the news? I'm sure you guys probably already saw it. We had some AMD news. AMD, big upside this morning, partnership with Meta, $100 billion revenue deal. Right? This is a pretty substantial deal in the market, and the market's looking towards this. So we are gonna talk about AMD today and what it means for the market. Right? We're also gonna go over Nvidia. Is there a sympathy play on other chip names, which to me would be my interest, right? And so we'll discuss that momentarily as well. Let's go over some other things too. We'll go over what's going on here on the Appler, right? Apple, big upside day yesterday. Nice trending move yesterday's session. So we'll go over Apple and what we can do with this chart today's session. Apple 267 new critical level, right? We'll go over our Tesla charts. Tesla downside yesterday, pretty aggressive. We'll go over Amazon as well. Amazon also interesting. Amazon, the gap fill level still rejecting. So we'll get an update on this as well. Guys, I was here yesterday. I was trading, but my Wi-Fi was in and out yesterday because of the blizzard in New York. So I didn't want to risk going on live and then it just ending 2 minutes afterwards. So I decided just to focus on live. That was my priority yesterday. But we are back in full effect. So I'm happy to be here with you guys. Anyways, are you guys ready? Is everyone ready for this? Is everybody ready? Before I start jumping into this, I want to make sure everyone's on the same page here. No energy this morning. I'm the only one with energy. Everyone else is sleeping in. I think the internet's pretty good today. No issues. Everybody's ready? Wow, we have 1,400 people on this live this morning. What's going on here? We are booming or what? We are absolutely booming. All right, so I have to progress. I can't just pause. All right, so let's dive into it. Let's go over our econ data earnings reports, and then we'll jump into our stream, and we'll have a good session this morning. Okay, so first of all, what's happening here in the market? This morning we have some data. Okay, the data is as follows. Today is Tuesday, February the 24th. This morning we have consumer confidence at 10 o'clock. That's the only data release we have this morning. There is a narrative happening here, guys. There's a shifting narrative. Do you guys remember we spoke about this? We spoke about this in the chat about 3 weeks ago. But you're seeing this narrative become more and more popular. The question is, AI has always been perceived as bullish, and AI expands corporate profits. It's better for businesses, margins increase, right? It's better across the board. That was the common theme. But now people are starting to see through it in a different perspective, with the idea of AI being something that could also take our jobs, which is obviously a natural byproduct of AI. And so what does that mean for AI? Well, it means that AI may not be perceived as bullish for everything as we normally would think. So I want you guys to start thinking about that and how it's going to impact different equities, right? Particularly, people are asking me all the time, Look at HubSpot, HUBS. Look at Team. Look at these names that are very AI based companies, and let's look for a buy. Right. Let's do some technical analysis on those charts. I'm gonna say this. I'm gonna say this here right now, and I want to set the standard here going forward. Not every dip is a dip to buy. I want you to understand that, right? Yes, we're going to look at some dip buy opportunities, but not every dip is a dip to buy. There's usually a reason why the market is selling, right? There is, in fact, most dips, 90% of dips are dipping for valid reasons. You're not smarter than the market. I'm not smarter than the market. The market is all encompassing. It prices everything in at every single moment. And if the stock is down, it's probably down for a good reason. Now, granted, sometimes it is overextended. Sometimes it is emotional. Sometimes it is a good company, and you're buying a good company. But I think a lot of these companies that you guys are going to tell me to look at here this morning, right, are not good companies. It's very important you understand that. The most important part about trading is it a good company first and foremost? Then comes technical analysis. Oftentimes people, I see it all the time. In fact, yesterday I was watching a live stream yesterday morning in the pre-market. I just clicked on something where I had some time extra. I opened the live stream and this guy was talking all this stuff, right? And I was like, whoa, what's going on here, right? This is not good stuff. So I want you guys to understand that not every company is a dip buy in this market, right? Why is that related to our 10 o'clock data today? It's not related to our 10 o'clock data at all. In fact, I don't even know what I'm talking about. Let's go over earnings reports quickly. On the earnings reports docket for this week. Today is Tuesday. This morning we have Home Depot in the pre-market session, HD. Besides that, you have nothing else to contend with. Nothing else really. AMC tomorrow, or actually AMC in the after hours. Kava, CAVA, Workday. Right, Workday is a common one of these tech names, right? These software names. They're absolutely melting, right? These software names are absolutely melting. WDay melting as well. So keep that in mind. Let's see what happens there on WDay after the earnings reports, right? TJX pre-market Wednesday. Besides that, you have Snowflake, CRM, Nvidia. Nvidia is the big one this week, guys. Nvidia on Wednesday's session is the big one this week. Okay. Thursday session, we'll talk about it. Friday session, we'll talk about it. Let's go into our charts and we'll have a good pre-market session. Okay. So let's start off with the first ticker of our pre-market. Let's start off with SPY. So on the SPY chart, what's going on here? SPY yesterday's session rejected off of a key supply, right? The key supply it rejected off of was 690. Now, unfortunately, my levels on TradingView are not updating as they should be, right? I did have things written out over here, but it appears to not be doing that. That's okay. It is on Q, so we're fine. But the biggest thing to watch out for is I want to show you guys the range that we're involved in. That's the first thing I want to discuss. Look at last week. So Friday's highs was around 690. The Wednesday's highs, 688. Tuesday's highs, Friday's highs. So you can see last week's highs was right over here around 690. So what I want to do is I want to literally just write that out. Right? I want to just set the tone here. Last week highs sitting exactly here at 690, which is where we rejected yesterday's session, right? So Friday into Monday session, and Monday session, what did we do? We opened right into it, looking like we're going to break out, and then big downside move all day, right? So 690 is a big technical level of resistance, and the market has shown us that yesterday's session. Now, where is the demand? In the same light of using last week's highs, let's use last week's lows. Last week's lows comes in from Tuesday the 17th, which is 676. So your two big levels that we need to discuss this morning is literally last week's highs and last week's lows. And if we are within this range, you know that we are sitting within last week's weekly candle, right? Look at last week's weekly candle. The weekly candle of last week, as we're going to find out, is exactly what we're saying. You can see last week's lows, last week's highs. If we maintain this range, the market's not going to really give you big moves. It's going to be slow. It's going to be choppy. It's going to be consolidated, right? You may get some trend. You may get some channel trades here and there, right? But not real trend, right? Not real big upside days or big downside days. Even yesterday's session, you look at yesterday's session, and yes, by all means, it was a downside day yesterday's session. Sure, it was a downside day. But was it a downside day with substance? No, it wasn't. Why? Because it wasn't breaking any levels, right? This is the most important thing. Contextually, what makes a big downside day, big downside day? Is it just because it moved a lot that day? For me, it's not necessarily the case. It's a combination of, yes, it moved a lot that day, but also it broke a level, right? And if you look at yesterday's session, it did not break a level. Oh, my mic is backwards. You're right. How's that? Probably substantially better, right? That's all it was. My mic was backwards. You guys got to let me know this, right? That's good that you let me know. First of all, who did that, right? Who is this? Deja vu. You are the first one to let me know that. Thank you for letting me know that. That should be you guys. We need to like set a precedent because I won't notice this until you guys notice it, right? You guys need to tell me what's going on, okay? So, thank you, Deja vu. Okay. On the chart, right, 690 is your big resistance and 676 is your big demand. What I'm trying to say here is yesterday looked like a big downside day, but the reality is it didn't break any real key levels. So when you go into today's session, you may be assuming, your assumption may be, wow, big downside day on Monday, which means Tuesday is continuation day. Not necessarily the case in a consolidation, right? In fact, you've seen it happen time and time again where you see big upside day on Friday, big downside day on Tuesday, big upside day on Tuesday, consolidation day on Wednesday, right? It's not giving you much 1-2 moves, right? A 1-2 move would be like this: a 1, a 2, a 3 consolidation move, right? This would be a 1, 2, 3, right? A big upside move, consolidation, upside move, right? And if you look back at the last few days in a row, you haven't really seen that. The last time you saw that was maybe back from Friday the 5th into Tuesday the 10th. It hasn't happened since. We've been slowly consolidating for some time, and the question becomes, when does the market actually make the move? And I'll tell you this, it's going to be above 690, right? If we can clear 690, last week's highs, this is where the big move in the market comes in, right? The big 1, 2, 3 move would happen here, right? And likewise, for downside, if we move lower in the market, right, which we know 676 is a big demand zone to watch out for, but if you lose last week's lows, 676, then our expectations are a 1, 2, 3 move back into 670, back into 667. That's my expectations this week. Is I know the two biggest levels are far away, but if we do break above or break below, that's where the big upside move comes in, right? And if there's one thing to realize, it's probably trade individual names, right? Futures traders, I know you don't want to hear this, but this is not A plus. Given this large weekly range of last week, it makes it difficult to trade within that range this week. That's just my 2 cents, okay? At least for trend-based traders. On the ES chart, what is it? You can see ES chart. What's going on here? What's going on? What are these drawings here? This is crazy. Let's fix that. What was my drawing So actually, what did we say last week? So last week we said what? We said the market needs to break above 69.27 for upside move. If it does, upside. If it doesn't, downside, right? And so it's kind of interesting to see what our analysis was last week, right? But you can see what happened, right? The market basically tapped the resistance, didn't break above it, downside move, right? And that was logically what happened. Now, what is going on now on this market? Well, now we can see that we've created a very clear weekly high, which is 69.27, and that would be this high right over here. So this is the new big level in the market, and so I would venture we should adjust everything to there, right? That should be our big supply this week. This is our big new supply, and our big demand below is where? Is back down at the Tuesday's lows. Tuesday's lows is at 6,800 ES. So we know that this is our range, right? Our range is quite large. Our range is quite wide. And if you want to see us get a big move, we need to see us either clear above the highs of this range or below the lows of this range. And that is where you can get the big trade, right? But for now, right, look at the consolidation. I can't hype the chart up. I can't make things happen that aren't happening. This, to me, is not A plus, right? Given the fact that we are still stuck in this ups and downs and no 1-2s, it's not, or 1-2-3s, it's not doing it for me, right? It's not doing it for me. Above the highs or below the lows, that's where things become interesting. That's where we get the big trending moves in one direction, right? Let's move on, okay? Let's move on. Again, I can't pull rabbits out of hats, right? I can't make things happen that aren't there. And then the QQQ chart, it's the same thing. Again, right? Last week highs, last week lows. 609.50, 595 on Qs. Now, granted, you can trade the levels, right? You can trade reactions off levels. My levels here are all very valid. For example, 60950 is your 10 out of 10 level, and 595 is your 10 out of 10 level. These are very important levels in the market, high inflection point levels. And you can see that we've been chopping around this area for quite some time. And what that's done here is it's created a very crazy fixed range volume profile, right? There's volume everywhere. In fact, the highest volume area is 601, which is where we closed out yesterday's session. Now, if you look at the Qs this morning, you may be tempted to try to trade in this range. But again, I'm going to say this right now. I don't think it's very clear. I think a lot of these trades are 50-50. I think the trend is 50-50. Could it go down today? Sure. Could it go up today? Sure. But what would give us the big move, like I've been saying for the last few tickers in a row, is can we get back above these highs? If we can, this is where the big upside move comes in. If we can't, then look for a downside move under yesterday's lows, under 599 on the Qs. If we break below 599, look for a downside move into 595, right? This would be the short side trade I'm watching today. This is the long side trade I'm watching today. Anything between this zone, anything between 599 on the QQQ and 60950 on the QQQ is no interest to me. And who just said that, right? Someone said 610.35 last week highs. Absolutely correct. Make the adjustment, right? 60950 was our level from last week. If you look at where the last week highs actually are now, right? Let's adjust that. He's absolutely correct. Look at this. The last week highs come in at 610, right? I'm not going to adjust for these wicks over here. I'm just going to call it 610 because that's a psych level. So 610 last week highs, no longer 60950, but this is the new chart that we have to contend with, right? Last week's highs, last week's lows, and a small level here at 599 to watch out for, right? What is going on here? Why can't I draw a level? Can I draw a level here? There you go. 599. Okay. So those are your big things to watch out for today's session. And that is going to lead us now over to the IWM. Okay. I thought you always charted before hopping on. I do, but sometimes adjustments need to be made, right? Obviously I do. IWM. What's going on here on the IWM? On the IWM chart, you can see that it is rejecting, right? And we spoke about this shift last week, and I still think the shift is in play. This has been a very bullish chart for a long time, and it still is maintaining that way, right? It's still obviously maintaining trend, and there is obviously a very aggressive trend line. You can see here, this is that trend line that we spoke about last week as well. And I know it's early stage, but I do think that this may be shifting soon. And what I would be watching for, and you saw it happen yesterday, right? You saw that a big aggressive downside day. And the IWM moves in trend. Once it starts trending, it trends all day. The first 5-minute candle of that session usually dictates what it's going to do the whole open, right? And you can see the first 15 minutes. The first 15 minutes of that session really indicate what it's going to do. You can see that usually is the correct idea, right? Big downside, continuation. Big upside, continuation. Big downside, continuation. Orb traders love the IWM. Why? Because it's one of the most trending indices, right? Most trending ETFs. So you can see this morning on the IWM, my biggest thing to watch out for is going to be, can we get below yesterday's lows? If we can break below yesterday's lows, which come in around 258, I'm looking for shorts. I keep doing that. My keyboard is different now, so I keep pressing the wrong button. 258 breaks, we can look for shorts here, right? If this breaks under yesterday's lows, then we can look for shorts back in 284. Because why? This would be a shift in trend. Why is this trend shift so important? This trend shift is that hourly trend line that we just spoke about, right? That major hourly trend line. If we can break beneath it, I actually think we see some substance selling here, right? Big selling in the market. Now, if we don't break the trend line, then what's it going to do? It's going to do this. Bam, bop, bam, bam, right? That could easily happen as well, right? Let's be aware of this being the most important inflection point. Even though I'm talking about all these bearish ideas this morning here in IWM, it's quite possible it just holds, right? So let's look and see what happens here. But the biggest thing is going to be, can we break below 258? If it breaks below 258, then we get the selling back into 254 for the downside move back into these lows over here from Friday the 5th, okay? So that is what we have here this morning on the IWM, right? Let's move on, guys. Let's go over some equities. Let's start off with the first equity of today's session. Let's start off with Apple, okay? On the Apple chart, you can see that we basically, on our Monday session, finally saw some big upside here, right? I wouldn't call it that crazy upside. I traded it long yesterday. I don't know if you guys were with us on live yesterday. I keep doing this. I keep pressing the same button. I'm so used to my different. Like key bind settings, where I press the wrong button and it brings me into my Safari. So I apologize for that, guys. But just bear with me as I get used to this. You can see 264.50 was our Friday's highs. And so I looked for an earlier entry here on this chart because it was displaying relative strength. Basically, this chart was maintaining itself stronger than SPY, right? And so instead of trading SPY longs, I traded this over resistance. So basically waited for it to break out above the highs. It rejected off of supply. It moved back down into a demand here. And demand was right over here at this previous day high, right? And so I longed it right over here on that second red candle at 950 and got an upside move into highs. Okay, so I'm trying to read the chat, but the chat gets me so distracted. I'm like reading the chat, and you guys are, I don't know what you guys are talking about over there. You guys are all over the place over there. Okay, so you guys are talking about Mamdani over there. I'm trying to talk about Apple, and I'm reading about Mamdani. Okay, so this was the big hold spot. Okay, big upside move came in, and then this morning, where are we? Well, I still think this chart has more room in the tank. I do. As long as we're over 267, I think this is still a long. Why is it a long? Because my view is that, what even is that? I don't even know what just happened. My view is that as long as we hold 267, we're going to slowly make our way back into these lows over here. The reason why I think it's going to do that is because typically when you see big upside move, right? Notice this for a second. Notice this. Big upside move, right? Followed by a big downside move, right? And what are you seeing this morning? Well, we're back in the same zone. In my view, in my eyes, I think we see big upside move, right? Now, this is more speculative. Right? Obviously, we need to be more level based, but it's important that we understand what's happening here contextually, right? Last few times we've seen us clear 267, we've seen buttery moves higher, buttery moves lower, right? And so I do believe that if we can maintain 267 here, I think we make the move into 272. So I'm looking to see today's session if I can get a little break and retest here, a break and retest of the 267s for an upside move. If we do, I'm looking for a long play into 272 today's session, right? That's what I'm watching for here on this Apple chart. Above 267 for longs. If it does, I'm looking for a move here in 272. If it fails below 267 for Tom, Dick, and Harry, who are going to come in the chat tomorrow morning, don't long it, right? It's only longable, right? It's only long worthy if it's above 267. Don't be a muppet, right? Moving on. Amazon. Amazon, we actually nailed this trade on our Friday session. And this reminds me of Apple a little bit because technically it almost is very similar chart. If you remember what we said on Amazon, we said that Amazon was a long, it was a long, it was a long, it was a long. All last week we mentioned long, 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 long. It was a long if it could break above 207. Once it broke 207, break, retest, upside move. Classic textbook break and retest. Now, notice something though. Sure, the break and retest worked here at Amazon. It was great. I loved it. We made money in this. If you guys remember, where did we long Amazon on Friday's session? On Friday's session, we longed Amazon. The best part about this is I longed Amazon over here, right? A little early I longed Amazon, right? Above that 205. And so Amazon was really nice, okay? But where did it reject into? Amazon rejected off of the highs, okay? It rejected off of the supply, right? Zoom out for a second and go to the 1 hour chart. Just do yourself a favor and look at this chart now. This chart right now is stuck, okay? It is stuck behind a major wall. The major wall is 213. It's the gap fill level. Obviously, if we break above the wall, if the castle walls break, then we take over the city and the chart goes to 230, right? But it's not doing it yet, right? It's not doing it yet. It hasn't broken above it. And this is not bullish for me right now until 213 breaks. If you see the daily time frame here, you're going to see exactly what I'm talking about. If we break above 213, there's a gap to fill there at above 220. And then here and above 226, another gap to fill here, right? 2 gaps in a row. Gap here, and then gap here at 232. And so I do believe that this is going to be a beautiful long eventually. But right now, it's not doing it, right? Because it did not break above 213. If it can clear 213, we'll trend higher. We'll trade this for longs, have a great session. But if it can't, we leave it alone. And that's the most important thing for me now, right? Because if you view this from the opposite standpoint, the people who are on the opposite side of us this morning are saying, hey, this is just a bear flag, right? They're saying, look at the larger time frame. This is a bear flag into supply for a downside move. And I can see the thought process here. I see it. And so what does that mean? When I see 2 clashing dots, I know that it is not a trade for me that session, unless it does what I want it to do, which would be above 213. If it clears 213 for longs, if you want to get frothy here, you can actually watch this for shorts now. What I'd be looking for short side move here is I'd be looking to see, can it break below 201? If it can break below 201, then we can move into 197. Below 197, the red band here, the red band over here, this breaks, this goes into 187. Okay? So the way that I would be most interested in trading Amazon, the way that I would have the most conviction is going to be doing this. Watch this for a second. I'll show you something, right? I would trade Amazon under the 195s for shorts or below the 213s for longs. There's some things you can do in between, right? You want to get frothy, you can do it. But the real big levels, the real continuation zones are above the 213s or below the 197s. I can't read the chat, man. Look at Rick the Ruler over there. Rick the Ruler, you got a bad mind, man. You got a bad mind over there. All right, let's move on. Nvidia. Nvidia 194 is your level. Okay, Nvidia reports earnings on Wednesday. What does that mean today? That means that no matter what you do on Nvidia, you're not going to make as much money as you normally would. Why? Because Nvidia has high IV. What is IV? IV is implied volatility. The implied volatility goes higher when when earnings reports come out, right? And so prior to our earnings report, which is on Wednesday, we're going to have high IV. And so be aware of that. Obviously, you know what I'm going to say here. I love the 194 break. If 194 can break, I'm looking for longs. This is my top watch for a long side move. 194 breakout, clears, it goes to 198.50, but we can't trade this until post earnings, right? Let's move on. Or you know what? Technically, you could do this with It's More Expert. You could actually do that. Yes, that's true, right? That is true, but the IV still will be pretty high, okay? Let's move on. AMD. So AMD is the one everybody's watching this morning, okay? And I see it with obviously it makes sense, but AMD is in supply, okay? It's in supply. AMD is big gap up higher after a major deal with Meta. $60 billion, I thought it was $100 billion, $60 billion deal with Meta, okay? So, of course, this is good, right? Of course, this is good, but I don't want us to go crazy today and just everyone longs AMD because this right now is the firework. You guys have seen this happen time and time again. When there's an obvious setup in the market and everyone says the same thing, what happens to that obvious setup? It typically does the opposite of what you think is going to happen. And so I agree, AMD looks like a beautiful long this morning above 219. But I want you guys to be aware of one thing, the fact that this may become an overcrowded setup. 219 breaks, we can look for longs here. And of course, let's not discount the fact that from a technical standpoint, it is totally valid. 219 breaks, we can look for longs back into 230. Why is that so important? Because if you go to the daily time frame here, guys, look how important 219 is. Just like Amazon 219 or Amazon 213 is the equivalent of AMD 219. 219 gap fill all the way into 239. But everybody sees this, and I don't like that, right? I'm not a huge fan of this. So let's see what happens. Above 219, we can long it, but keep your head on a swivel, right? Don't go full porting this and then bag hold it if it fails back below. Because if it fails back below, you know what's going to happen here. This is going to turn from a strong name into a weak name. I like to keep you guys aware of each possibility, and that is a possibility today's session, right? But again, 219 breaks, we can look for longs. Let's do a quick SMH check for a second. On the SMH chart, you can see it's been slow for a while, right? It's been slow for a while. It's been lagging. We're back at supply here at 420. Just be careful of the supply above us, 420 supply here on the SMH. Obviously, if you break above supply, it goes higher. but we know that this is a triple top high here, right? 1, 2, 3 highs tapping at the same exact level. We know 420 is a big spot in the market, so be careful of 420 supply. That's going to impact all of your semiconductor names. Tesla, TSLA. Tesla's weak. Okay? Let me hydrate for a second. Tesla is weak. And Tesla is weak because it's under 415. And if you remember, I will tell you when we're right, I'll tell you when we're wrong. So many times I told you guys to watch 415. If 415 couldn't break, it was bearish. You can see, sometimes I'm wrong, I'll tell you when I'm wrong too. But we were not wrong about Tesla. Again, 415, and then obviously sell-off day on Monday session. Now, what does this mean for Tesla? To be honest, Tesla's short was at 415. No longer do I see anything right now in Tesla. I think that there's obviously some demand below, around 385. Again, I keep doing that. But 385 was your big demand below. 385, big demand below. What does it do there? I mean, at that point, if you see us break below, if you see us retain under 400 today, you know where we're going to, 385. So below 401, 400, right? You're going to see 385. If you reclaim here at 400, we're going back into 415, right? That's all it is on Tesla's chart. The new level to watch out for is this one right here, the dashed line. The dashed line is the one to watch out for. In fact, I'll make it yellow so we all understand it. This is our bull bear pivot. Above bull, below bear, okay? Let's go over one last ticker, guys. Let's make it a good one. Let's think about this. Let's think about this in the chat. Everyone type their ticker. I'm gonna pick one that is good, okay? Don't type some random nonsense, small cap, joke of a name. I want to see something good here. What do we have? What do we have in the chat? Oracle. I haven't heard of Oracle in a long time. That could be one. Oracle and Meta. Oracle, Meta, CRM. We'll do rapid fire. Oracle, Meta, and CRM. Let's do that. We'll do all those quick. Oracle, ORCL. Oracle. Is this an example of a software name you don't want to buy? To be transparent with you, I don't know, and I reserve the right to tell you when I don't know something. I don't know. I do see a level here at 120. I think that's where it's going to. Oracle 120. That's where this is where it's headed to, right? So 120. You can see I'm charting this live right now for T-Fit in the chat. This is live for you, man. 120 is your level, okay? That's your big level. 120, 120, 120. Okay. Meta chart. Meta was all about the 680 rejection. Obviously now it's back in demand. It's sitting in demand here. This is anyone's game right now. It's consolidating. Let it sit in consolidation. It's doing nothing. It's a sleeping giant. Last ticker was CRM. Okay, this is the last ticker of today's session, guys. CRM, also another tech name, another software name. Where is this chart going to? My view is that the chart is in demand right now. This again is anyone's game here. It's 165 demand. If it's a name you want to buy, if it's a name that you see you want to get some equity in, then buying into the 2018 highs is not necessarily a bad idea. Or it should be 160, 161, 160 here on the CRM chart. Again, I'm not saying we should buy CRM. I don't know about the company. I don't know the fundamentals here. But if you want to buy the company and you think it's a valid stock to own in your portfolio, then owning it at this technical demand is not a bad idea. Okay, guys, that's it for me today. Thank you all for joining in. Have a happy and safe Tuesday session. I'll see you guys all on live. Bye, guys.